So everyone and their mother is still obsessed with this MSTY product. Not surprisingly, because it just paid out a $2.37 per share dividend for May, which is nuts. So everybody who's bought it just thinks this is the greatest thing since sliced bread. They're going to be a bazillionaire. And hard to tell them they're wrong, because so far that's kind of been the case. We have a pretty small sample size of real world returns of the thing so far. I keep coming from the place of most things like this that seem too good to be true are too good to be true. So what am I missing? Where's the catch? So I keep digging in, trying to figure out, okay, how can this go wrong? 140% yield looks like free money. I got people in my life, friends and family, asking me about this thing. I got a previous video I made about MSTY, which is still getting views because people clearly keep searching MSTY on YouTube. So that one's about my sort of initial research to try to figure out like what it is, what are the benefits, what are the risks. But I've learned a lot more since I made that video, and I made this handy dandy MSTY investment simulator. This took a couple of weeks because I really wanted to be able to see, like when you plug in different variables, what happens over time. Like what makes this thing go to zero? What makes you a billionaire? Because the thing that I feel like most people drastically underestimate is that these funds do have drag and decay and erosion naturally built in based on the strategy. You can see that if you look at other yield max ETF products, the erosion is crazy. Most people who own MSTY seem to think if the share price is roughly the same as 12 months ago when I bought it, then there was no erosion. Yes, I understand technically, nominally, that's true. There's still erosion going on underneath the surface in the fund. It's just that the gains of MSTR and the volatility were able to make MSTY outpace the erosion that's going on. So the point is, I want to understand how the thing actually works, but most of all, just how to stress test different scenarios and not just paint a bullish fairy tale for everybody. So the first thing to understand is this, which is real world returns of 12 months of MSTR versus MSTY by this guy, Hermes Lux. So the first like risk you're taking is that you just massively underperform MSTR by holding MSTY. Now you're getting monthly cash dividends, whoop-de-doo. But if your returns just underperform by 100%, are you really going to be that happy about getting the income every month? There's plenty of reasons why people need an income fund instead, but just know that in a bullish scenario where your underlying Bitcoin and MSTR go up, your MSTY is probably going to drastically underperform, and you may have just been better off holding MSTR. So you need to understand that. You also need to understand that you definitely should not buy this thing if you don't already understand and probably own Bitcoin and or MSTR. Most people are saying treat Bitcoin as savings, treat MSTR as investing, treat MSTY as income. Not financial advice. Do what you're going to do. Just understand there are quote unquote risks even if the strategy is successful. Strategy, no pun intended. So MSTY is a synthetic income product. It's built on leveraged exposure to MSTR, which is itself built on leveraged exposure to Bitcoin. And then they layer on aggressive option strategies to harvest the volatility of MSTR. So like I said, you better be bullish on Bitcoin and MSTR, and you better understand that, yeah, it is risky. But I built this simulator thing because I feel like most people online just really don't understand what happens if the volatility were to dry up, or what happens if MSTR stops mooning, or what happens in a choppy market. I just wanted to be able to answer those questions. So MSTY does not hold MSTR stock. Instead, it holds 90% treasuries, which is interesting. If you look at its holdings, you may not have known. It's mostly holding treasuries. And then it has synthetic exposure to MSTR with long call and short put. And they do active call spread management. So they don't just do simple covered calls. So they aggressively distribute options premiums as big fat monthly dividends. But obviously the dividends are paid right out of the NAV, or the net asset value. So some people are confused by that. Like they just announced the dividend and the share price dropped by like 8% immediately. And so they're saying, well, why is it dropping? By definition, that's going to happen every time. The dividend gets paid out, the share price gaps down. If MSTR keeps ripping higher, then the drop can be recovered quickly. But if MSTR stalls or chops sideways, that's where you see a lot of the erosion in funds like this. Every time the dividend gets paid out, the net asset value drops, meaning the share price drops. And then if the underlying can't outperform the drop every month, then you're just slowly grinding down. That's the natural decay of a fund like this. And a lot of the other yield max ETF products like this, covered call funds, they grind down over time. The underlying drag there is unavoidable. So there's downward pressure innate in a fund like this. So again, the question is, what does MSTR share price and volatility have to do to outpace those natural drag decay effects and make MSTY keep going up, or at least not erode? So when I first built this simulator, what happened was it kept trying to make every MSTY holder a billionaire after 10 years, which most people will probably be happy to hear. But if you just naively compound 100% dividend yield and assume MSTR does plus 20% every year, then the math's going to look incredible, of course. There's just no way that that's reality. In the real world, options don't always pay the same. Markets chop up and down. The NAV gets hit. Reinvestment is inefficient. There's friction, there's slippage, and there's structural decay from the design of the fund, and there's active management drag that eats away at the NAV. And if you don't model those effects, then the simulator is useless. It just becomes this crazy, unrealistic, bullish fantasy. So I added all these things that you see on the side here. If you go to the comprehensive guide, you can really like read the in-depth of what it's actually going on, what it's actually doing. But just on the side here, you can see what we added is dynamic dividend yield logic. So dividend yields higher in high vol, lower in low vol. NAV decay curves, random volatility. You have to make the model introduce randomness. Upside capping, because that's real. MSTY can't fully capture bull markets. That's one of the main risks you take, is that in bear markets, you eat a ton of the loss, and in bull markets, you can't capture the full effect of MSTR mooning, because by definition, with this strategy, you're giving away some of the upside in favor of getting the monthly income. And then structural drag in bull markets. So even when MSTR moons, MSTY, like I said, doesn't go one-to-one. So the goal here is to stress test a bunch of different scenarios. It's not about predicting the future. Obviously, none of this is financial advice. This simulator is for fun. Don't make any investment decisions based off this video, this simulator, or any YouTube video for that matter. But you can input your initial investment, your share price. It'll default to 20 if you leave it blank. A holding period, do an expected dividend yield, an expected annual return for MSTR, and then your tax rate, and then in a taxable or tax deferred account, and then whether or not you want to reinvest the dividends. Dynamic dividend yield based on MSTR return, I would recommend just keep that toggled on. It's trying to make it more realistic. And then I decided to do this, run 500 simulations every time, and then don't just show you one answer, show you the range and the median and then the different percentiles, because just want to show that there's a drastic different range of outcomes that can happen depending on the randomness and volatility that happens along the way. So obviously you can see if MSTR is mooning, or at least doing an average of 15% a year, you're going to be just fine. I mean, this is showing $630,000 worth of dividends over 10 years. And then the initial investment grows not crazy. And in the median case, it actually goes down a little bit, but you're paying out all the dividends. If you reinvest, then it just keeps growing and growing and going because you're compounding all the reinvested dividends. You can see in like the crazy tail scenarios, drops to 25,000, even though you've been reinvesting, or it goes to 33 million, but you don't want to just show that one number. So you want to show this is something like these are far more likely, or this range. It's pretty wide, but it's much more likely. What's interesting is you can even show, so I can even do an example of this guy showing real world numbers. So he invested $10,000 at a share price of $29.49, the holding period of 1 year, dividend yield 1.3, and then MSTR, we know, did 249% in that year. And then he did do reinvesting the dividends. So if you run it in that case, you can see it's not crazy off. I mean, in real world, it's 24,000. The simulator is saying 37, medium is 36, and the range is 15 to 86. So it's not crazy off, but you can see even I add in all these different drag and decay effects, it's still too bullish from what that real world scenario was from a year ago when MSTR did 250% in a year. So it's really hard to make this thing not be too bullish because it's hard to capture, like I said, all the real world drag and decay effects that actually happen in a fund like this. So I kept adding in more and more and more effects to try to make it more real, to match it to real world numbers like this. So here's one where you bought at a pretty high price, you hold for 10 years, MSTR only does 10% a year on average, you don't reinvest. So you actually see your principal decline after 10 years, even though you get these dividend payouts. So you can see how if MSTR doesn't go up enough, you're seeing a lot of that drag and decay effects in the fund. That reminds me, there's an issue with how it calculates after month 1. And I actually fixed that in the back end, and I have to deploy the new version. So I'll do that right after I make this video, so this will be fixed. All right, I deployed that month 1 fix so that it's not messing up the math and dropping after month 1. Now, this is gonna seem crazy. So if you're putting in expectations of dividend yield of 150% and MSTR expected annual return of 25%, most people are gonna say, oh, it's been doing that over the last year or since this fund's existence, so that's not that unrealistic. Yeah, you're going to do a 30x if it does that because that's probably, if it's doing that, then that's probably Bitcoin going to 5 million or 10 million or something in that 10-year period, right? Like those are extremely aggressive inputs. MSTR doing a 25% annual CAGR for a decade and a 150% annual dividend factor is absurdly high for 10 years straight. So that's assuming Misty can harvest 12 to 14% monthly yields continuously while the underlying rises. That's unlikely because in reality, covered call yields almost always compress in a raging bull market because IV potentially comes down. So even though these inputs like don't sound that crazy compared to like what it's done over the last year, those are ridiculously aggressive inputs. This is basically a 30x, which is a 41% total CAGR after drag for MSTY. So in my opinion, the simulator is working, like the math works. It's just that these are super aggressive inputs that would be very hard to hold true for a full decade. So I might actually add in like a realism disclaimer up here that like this is crazy bullish and don't go buy a bunch of MSTY just because of this. But yeah, if Bitcoin and MSTR do what we all hope and think they're gonna do, this thing's gonna generate some cash. If MSTR were to go down, obviously you're gonna lose all your money. Basically, MSTY is gonna tank hard. You're still gonna receive some dividends, but over 10 years, this thing's gonna do terribly if MSTR were to go down, obviously. Even if you reinvest the dividends, that's one of the challenges with a fund like this. If you're reinvesting dividends, but the portfolio value and the net asset value is tanking, you're just getting smaller and smaller percentage of a smaller and smaller pie over time. So it's helpful to see that. I know nobody who's buying this thinks MSTR is going to go down. Obviously, we think it's going to go up. So if you do like a modest 10% MSTR expected annual return and modest dividend yield, so reinvesting, that's not making you crazy rich. You still need MSTR to go up more than that because, again, there's all these decay and drag effects that are probably going to drag it down. I mean, we just had a dividend that was crazy high. So what does it do if the dividends are even higher? So obviously it does better. That's reinvesting. So most people aren't going to reinvest because the point of this is to generate income. So I think that this shows realistic, like I think this is not meant to show you like you're getting crazy rich. I mean, maybe there's real world scenarios where it does better than this. Again, you can see the range. But let's put something again more realistic. So 1.5 dividend yield and 25% growth for MSTR. Reinvesting dividends is always going to make it look better. But in the real world, pulling the dividends out is going to show you a much more realistic example. So obviously, you need MSTR to perform well and stay volatile. If MSTR is flat or has low volatility, it's death by 1,000 cuts. And like I said, even if everything works great, you're probably still going to underperform just owning MSTR, so just know that. But you'll have generated income, and in theory, you'll have less volatility because the income blunts the volatility of your overall portfolio. So most people encounter something like this, they probably go, that's too good to be true, I'm not touching it. What's the catch? Or they go, take all my money. Both of those reactions are too extreme. It's not free money, and it's not a scam or anything. It's a structured yield trade that requires belief in Bitcoin and MSTR, active exposure management by the fund, sufficient volatility and price action in MSTR, and got to be comfortable with missing big upside runs. So for the right person, this might make sense. The numbers have been eye-popping in the real world so far. Like I said, they just paid out a $2.37 per share dividend, which is nuts. But I just innately want to approach this conservatively because every single person seems to think, oh, this is just going to make us all rich. And of course, most things like that, if it's too good to be true, it usually is. MSTR may just be the goose that laid the golden egg. So again, it's fun to play with this. You can use a simulator. I'll put the link in the description. Obviously, you can see the URL. Again, this is just for fun, not investment advice. If you want to go on the journey with me like I went on trying to understand Misty from square one, you can watch the first video I made, which is here. Obviously, if you found any of this valuable, please hit subscribe, hit like. But most of all, remember, Bitcoin is inevitable.